Welcome. You've just entered the trading pit, your home for sophisticated takes on the crypto markets. It's April 18th, just one day in 16 hours from the Bitcoin halving. And here in the studio is JJ from J Labs, all by his lonesome, ready to give us a detailed market update. I am your host, Marconi White. Tuesday, Bitcoin, ETH, and the rest of the market are so anemic. Is the bear chop a given for the rest of the quarter? Is a V-shape still a possibility? What about that liquidity Armageddon? We're going to find out. But first, it's rapid fire, where I look for simple answers to complex questions. JJ, I know you're all here alone, but are you ready?
I'm ready.
Oh,
Solo
good.
show.
It's all about you today. All about you. All right. It's tax season in the U.S. Tell me, do more people cheat in TradFi or in crypto?
TradFi, they just do it legally. So they pay people to figure out the loopholes and exploit them. Crypto gets a bad rap, but I'm putting my money on TradFi cheating them.
Oh man, he just called out all the VC people, all the people in the chop shops. Okay, you're on notice, people, and we'll send a note to Warren. What's that?
We see you.
We see you. All right, you're an options trader. What's the worst rookie mistake for options traders?
Not taking profit. When the biggest thing with options contracts is you see some kind of profit, especially 30 to 100% plus gains. Take that off the table. As soon as you get a trade in profit, you want to sell that. It's a decaying instrument.
There you go, people. Some real alpha right there. And we haven't even got in, a couple of minutes into the show. All right, tell me, what about for veteran options? What's the worst mistake veteran options traders make?
Getting too comfortable selling volatility. As you get good at it, it becomes very appealing. You can make a lot of money, but then there's always that snapback effect when volatility runs like crazy. And more often than not, they're the ones caught on the wrong side of it. So it can be very lucrative, and then you can lose years worth of gains in a few days.
I was going to say, spoken like someone who's got some fingers burned.
Yep.
Hopefully not. All right. Bitcoin halving. Are you partying or just passing out?
Pass, sadly. Non-event.
Oh. You're getting a little too old. You're not going to head to Dubai, deal with the rain and some cocktails?
No, that's not for me.
Stuck on Joker. You're just walking away from that. All right. Last question here. When do you expect your trading expertise to be replaced by an AI bot?
Probably by the end of the decade, right? Kind of seems inevitable. It's coming.
Oh, I thought you were going to say by end of 2024. What, you're going out that far?
Yeah, I think it'll take some more time.
Oh, what do they say about traders?
Like, there'll always be edge, though. I don't know. I have to think about it some more. I haven't put too much thought into that, but I feel like there'll always be something to exploit in markets, so possibly never.
It's rapid fire, so we can't give you too much time. But okay, we'll have to bring this one back and figure out when AI is actually going to replace us all. I, of course, am AI. Clearly, you can tell by my amazing personality that's dry as sandpaper. But welcome to everyone here. We have Light Signatures, KS, JB, Aditya, G-Man, and 251 Legacy Trail. Gosh, I love that moniker. Welcome, everybody. Glad to have you here on Thursday. Definitely hit the like and subscribe button. Share this with anybody, your mother, your brother, your little sister who wants to hear about crypto. And definitely hear from JJ, the suave man in a janitor outfit who's going to break down the markets. And with that, we're going to get into it as we got all your attention today, which is exactly what we want. And man, just as I noted at the top of the show, Bitcoin and the rest of the market have continued to look weak. Bitcoin, just before the show I was looking, was sitting about 62,000. ETH just barely hanging on to 3K, and Sol at around 134.18. The ETFs haven't helped at all this week. We saw another big sell-off from GBTC. I think we were down 165 million. And IBIT and FBTC have not been adding. The slowdown for Q2 is a real thing. And then, of course, we've got the perpetuals and options, which look a little interesting. The perps, I was seeing a little bit of long interest, definitely perking up, short interest going down, and we can get into the options. So, JJ, tell me right now, are we looking more like it's a V-shaped recovery, or is it the bear market crawl for Q2?
I think we're in the bear crawl until further notice here. So it's just kind of looking, it's not looking too good. We had that sell-off yesterday, kind of had a bounce from that 50K wick down. But really not there was no bullish engulfing candle there. Not the kind of momentum we really wanted to see. And the reaction off that move It's just, yeah, I think it's like we laid out a few days ago. It's kind of bear chop until further notice, until we see Bitcoin really make a strong move above the 67,000 region on some convincing spot volumes. I think we're just looking at chop here. Probably have a range around 64 to that 58K range that we touched yesterday. And I would expect just continued chop until the market tells us otherwise, right? This could change in a day or so, but I think that has to be your bias here. You don't want to be betting too much because obviously it's just going to be moving in a range and continue to liquidate out both sides.
Okay, so you laid out these scenarios. Just to recap it for those who missed Tuesday's show, which you shouldn't, but if you did, we've got the V-shaped recovery would actually see us continue to move higher above the all-time high. We've got the bear crawl, which was, I think, the most likely scenario, which is that we continue to range maybe somewhere in the 50 to 70 range all through Q2. And then we have this third scenario, which I guess could really hit either one, which is this liquidity event, this liquidity Armageddon, which is the outside forces of Dixie rates just crush equities, crush risk assets, including Bitcoin. And then we potentially see this recovery. So we're not going to get too much into that because I feel like it's an outside event, and Ben's not here to offer his insights. But has anything changed from the numbers? I know you just looked at the TA. You're seeing that we saw this sell off. What about if we look at perpetual starting to stack up, and we're seeing a lot more interest on longs versus shorts? What is that telling you from a bear market versus V shape?
So the increasing long short ratio, I think that can be attributed to the cash and carry trade unwinding. So for months, basically this whole run up since February, we had extremely high funding rates, which meant people could be long spot, short the perpetuals. Once the funding rate unwinds, and it actually kind of went negative over the weekend for a little bit, that trade is no longer profitable. And in that situation, I think the people who have had long exposure to Bitcoin via spot and then we're shorting the perpetuals, they kind of become incentivized to take the profits, and you just put it into a perpetual long and see if it can continue to the upside from there. But if enough people do that, it obviously creates liquidity pools lower, which could lead to a larger wipeout in the months to come. So that's something worth keeping an eye on for sure. If we look at some liquidity pools here, these are from last week, we can see the short side of this trade is very overcrowded. So like I said, if we can catch this momentum, if the bid can catch momentum in spot and lead us back over like the 67,000 region, we just see how much liquidity there is above here, right? Especially like this is just in the past week, how many liquidity pools are back above 68K to 71K. And this is really like all-time high fuel. So if we start to catch that momentum, this will get run over. And obviously when people are liquidated from the shorts positions, that turns into buying power, which will just keep sending us higher. So the fuel is there. We just don't have the momentum to carry it through and squeeze those shorts out yet. And that's kind of what seems like the market's waiting on, is some kind of catalyst event. That could be a falling Dixie, or who knows, like we could see those asset managing files that have been coming out, the 13Fs. Maybe we see a big name in there in the weeks to come. And similar, like we saw that in 2021, basically the day that the Tesla announcement came out that they bought however many billion worth of BTC, the market went ballistic. It likes that other people own Bitcoin, I guess. So we could see a similar reaction there if some big name comes out and says, hey, yeah, we bought 10 billion worth of IBIT. So just be prepared for that. And you'll see it in the market. Like the market will give you those signs. You would start to see us recapture this momentum here above 65K. You would see increasing spot volumes. And if that momentum starts to build, I think that's the time you want to get in. You would have ample time to react before we really make that move back to all-time highs. But until you really see it, especially during like New York session hours, is when you would want to see that kind of bid catch momentum. I think your safest bet is to assume between 64K and yesterday's lows is just continued bear chop.
Okay, a lot to unpack there. I did have a question here in the audience asking about any expected impact from the Hong Kong ETFs that were just approved. I'm assuming you're looking for some interest. You just mentioned the New York session, obviously, and then you have just spot. Do you think that impulse there would be enough to maybe help with that momentum that you're looking for?
Could be. We don't know, right? But again, the market will tell us. So if we start to see a resilient spot bid, maybe that comes in the Asia sessions. I typically look for strength in the New York sessions because that's been the driver for most of this rally since October. But there's nothing to say that can't change, and maybe Asia is the one that drives us to new all-time highs. But either way, what you want to see is spot buying. spot buying driving us back above all of this lost momentum from the past couple weeks. And if that's paired with those short liquidations, we could see a return to the upside rather quickly here.
So what about the whales? We've commented on this many times, where we're actually seeing some whales buy in when the market is looking fragile. Are you seeing that now? Would that give some confidence to those who are expecting us to see some kind of return?
Yeah, hold on one second. Let me see if I could load up my divergence chart. But that's been continuing for the past few weeks. We've been seeing whale accumulation taking place, so that is a good sign. That's one of the things that we look for to say that, this is probably a good value range. So you see these orange lines indicate whale wallets holding greater than 10,000 Bitcoin accumulating. You see they basically stopped buying directly at the top. And when this turned blue, both whale wallets and smaller wallets were selling. And then basically from the 70K level on down to where we are now, we've had whale wallets as well as smaller wallets accumulating. And you can see these red lines have been a pretty good indicator of price continuing upwards in the month to come. It's not necessarily a bottom signal, but you can see over time, price tends to react pretty strongly from anytime when we see these red lines of accumulation here. So it is a good sign, but doesn't necessarily mean we bottomed here. It just means that, it's like we've been saying, it's going higher long term. It's just a matter of how
Yeah.
much pain we're going to be experiencing in the next, few months, quarter two. We'll have to wait and see on that.
So I feel like springtime is the time to sell and go away, right? Go find a nice place to watch the flowers, the crocuses come out of the ground, while this market just chops. So right now it looks like the likelihood is chop for Q2. Is that where you're?
It seems
Would you
like
agree
it, right?
with that? Yeah.
Like if we look at the implied volatility index, for example. So we see how beaten down this got at. Like here was October. We were all the way down here in October, and then obviously everybody started to front run the ETF news, and that just sent implied volatility levels screaming up into the ETF. At that point, people were paying such insane premiums for call option contracts because everybody wanted upside exposure that it became too lucrative to sell that volatility, right? So if you own some spot or if you wanted to do bearish call spreads, that just became a very popular trade because there was so much FOMO demand for Bitcoin at that point. And then it got into really oversold conditions into February, and then we inevitably had this snapback. Problem is that it once again got way too ahead of itself. I was talking on Deribit's podcast yesterday, and one of the things we were talking about is like the pricing in the April contracts, which we've been covering in our newsletter. Like the market, the halving's never been a binary event where price just skyrockets, the day of, even the month of. It takes time for the halving to play out because it's a change in the supply that's coming online daily, right? The amount that miners have to sell. So that gets cut in half. But the demand that takes to drive price up, that also has to come into play too. And that can take months, right? So it's really over the course of 1, 2, 3 months down the line when you see the effect of the halving ultimately manifest itself in price. But what the market was basically pricing these contracts as would be like 100K Bitcoin by the end of April, which is like the ability to sell those contracts and take that profit today was too great. So we've seen this volatility crush now. Kind of looks like it wants to fade lower, especially if we keep chopping in this like 58 to 64K region. This would just keep bleeding down to probably like 60 or so. And that's probably a good level for volatility to bottom out at. And then we could see another, wild leg up. Maybe that's the move that takes us to 90 to 100K. And then we see kind of the same effect most likely play out again, where people get ahead of themselves, start buying 200K call options, and market resets again for a bit.
So I want to walk through two scenarios, kind of the bull side scenario and the bear side scenario. So for the rest of the year, when you're looking at sort of the way the market structure is looking and how it's going to be reacting to the halving, walk me through what you think a bearish kind of post-halving market would look like, and then what a bullish one might look like. Because to your point, there's the synchronization of those two events, right? That the Bitcoin has to be coming into the market, the miners have to be adjusting to the lower supply unlock every 10 minutes, but then the demand has to be there, right? And we've talked about oftentimes on this show about how we want to see this go deeper into 2024, possibly until early parts of 2025 to really have a sustained bull run. What do you think you would be looking for to say, okay, this is going to end prematurely? The market got ahead of itself. Now we're going to go back into sort of a midwinter. What do you think that would look like? What do you think the signals would come from?
I think that would be something like where we drop back down to the 46 to 52K range and just kind of consolidate around there for a month or two. I think that would be pretty bearish. And that would probably be a sign that this was kind of like an echo bubble, like the first wave. And it would probably take a lot of time for us to really capture that momentum and go back to 100K. That would probably postpone things until 2025. And we might be in like a longer cycle where price just moves slower, like it's moving up over time, but it's not in the same parabolic fashion that we saw in February or back in 2021 and prior cycles where, price does wild 2x swings in a matter of months. So there's that possibility that it's just kind of like it's an institutionally adopted asset now, and it doesn't give you those same returns as it did in prior cycles where you could expect 2x within a year or more.
So that's the bear scenario, sort of the 46 to 52 range. We just chop there for a long time. A lot of the interest leaves the market. Maybe it's good entries, though, almost generational entries, I would imagine, for some who are willing to hold on for 10 years.
Yeah, it would become totally a spot buyer's market. It would be very difficult to trade that kind of thing on perpetuals and make a lot of money holding positions for long periods of time. It would really just kind of be a steady, slow grind up, similar to what you see in like the S&P 500, the Nasdaq, how it's constantly going up, but it's not these wild, 10% plus day gains in it. It's just kind of a stair steps the whole way up.
Okay, now walk me through the bullish scenario for this cycle. What would take us to well over 100K? What would the market structure look like in your opinion?
It would look like it does now, mostly because if you look at this, so if we look at 2021, how high those funding rates were, the options FOMO that took place over the past couple months, that's all been washed away, right? So if price were going to accelerate in the coming months, it seems like this would be a logical takeoff point. If you kind of look at this fractal, like where we are here on this chart, it looks very similar to this January 2021 retest, or possibly even like this December retest where we just washed down, like we made new all-time highs, and then there's a period of chop before an acceleration back up. So I think that's something where we're looking at 90K or so Bitcoin by June, and I don't think that's off the table yet. I think, like we said, it wouldn't take a whole lot as we look at these perpetuals. The fuel for all-time highs is there by way of short squeeze. So if spot can find a bid and we can get back above 67K in the coming week or two, I think it would be pretty easy for this rally to catch legs and go back to all-time highs, in which case we might be looking at 90K or higher in the near future.
90K or higher. I'm sure people want to hear that. And you think that would be the best case for a longer-term bull going into 2025? That's what you'd be looking for.
Yeah, I think that would have a lot of symmetry with past cycles, the way Bitcoin's behaved. And then you add on to that this institutional adoption, which I don't think is going away. Obviously, inflation has kind of normalized, so that just strengthens the selling point of Bitcoin even further as you have institutional managers kind of shilling that, right? Making these nice brochures showing everybody how inflation's higher for longer forever. And they can sell that to people with a whole lot of asset under management, and it's a convincing story. I think Bitcoin has a good value proposition in that kind of environment. And you could see it really catching on, and then we could see, this could be the best cycle of all. So it remains to be seen.
The best cycle of all.
The possibilities there, right? I'm not counting it out yet.
Yeah.
Just due to how similar these fractals look. If we look at
all right, you heard from the janitor. Don't get too depressed and too sad right now. Also, go home early. You don't have to go out for the party for the Bitcoin halving. All right. Well, I know we're going to be looking at a couple of other analysts who have posted their analysis on X, as well as we got to look at outside forces. But definitely, before I do that, definitely want to give a shout out to everyone who's here. I see Adrian has joined us. I think that's the latest person to join the chat, but welcome. Definitely hit that like and subscribe button. Share this wherever you share your information, be it Reddit, be it X, or be it some other social where you're trying to get more people to get a sophisticated take on the market. JJ, I want to walk through what you're seeing from an options perspective. Has that at all shifted for May and going into July? Obviously, we can talk a little bit about the options going into the halving. I looked this morning, I didn't see any changes there in terms of max pain was still sitting at 66K, had a lot of options at 80K, 60K. Are you seeing anything on the options side that's starting to change?
Yeah, it's been really interesting watching these May contracts. So we wrote about this last week, and at the highs of last week, we started to see a lot of put buying. So it was something around 2,000 puts or so entered above 70K into the May 31st expiry. That was last Monday. So as we were kind of chopping around 70K, people started buying puts. And then the whole way down, we just saw an explosion in call interest. So it went up from around like 5K notional BTC worth of calls to all the way above 20,000 BTC notional worth of calls into this expiry just in the past week. So there's just been a ton of interest in this expiration date for whatever reason. Like we we're pointing out in that implied volatility chart, it's kind of been in this downward pattern for a month now. So, and like we were also pointing out, like this chart does look like it could accelerate or break down pretty quickly here. So it seems like the market's gearing up for some volatility. And yesterday we saw an additional 2,000 puts come into this expiry. So it just seems like the market's loaded for some increased volatility in the coming weeks. I don't think the market's necessarily betting on this bear chop to continue just by judging on this one expiry, right? Like that's a whole lot of premium that's being put into these contracts. The most active of which was a 69K call option. There's a lot of 57K puts being bought as well. Let me just pull that up on the option screen. Yeah, so May 57K puts, they saw about 1.2 million worth of premium put into those, 400 BTC worth of notional. So it's getting a lot of interest for whatever reason. It's something to keep an eye on. So basically, you look at these two scenarios. We have one side that's betting on price being above 69K into May, and then the other side that's betting on it being below 57K. So you might want to fasten up your seatbelts here.
Be prepared for that volatility. What's the lower end? And we talked about a bull and a bear kind of scenario. How low do you think this can go, and how long can it go down and still stay in that bull type of scenario? You just mentioned 54, I thought, or 57. I mean, can we touch those levels pretty safely and then be able to rebound?
I don't think if we go below, like, so here's the 100-day moving average, which held back in January. So after we had that ETF reset, we see price based on this 100-day moving average and ultimately accelerate from there. I feel like if we lose this level for any meaningful amount of time, like a weekly close, we're probably inevitably heading back to the 200-day moving average, currently around 47K. And I think that's probably going to lead to a period of prolonged chop. Like we see what happened in the summer. We had kind of that echo bubble rally above 30K, and then price faded throughout August, lost it in September. And that just led to a long period of chop here where price consolidated before breaking up. So I think that's probably something that we're looking at. Like we lose that 56, 57K level for any meaningful amount of time. It probably goes lower to, 46, 52, possibly wicks down below here. And then we just see a new channel form in that range. And that would probably take us a month or two to recover. And that would ultimately be prolonging the acceleration all-time highs. You're probably not looking at all-time highs until quarter three or quarter four in that scenario.
Okay. All right. Give some ranges for folks who are thinking about trading, and definitely a warning sign. Ben joined the chat. He says, walking into talk of 200-day moving average. Stop scaring everyone, JJ. So I think you just add a little bit of haunting. You're going to put on your
the thing about it, it works as a magnet over time. But
yeah.
I don't know how else to describe it. Market psychology, whatever you want to attribute it to. But we see like 2021, it obviously tested even during that 2020 rally, tested it in September, broke through it in May. So even when you're accelerating to new highs, price finds the mean. So you always have to be prepared for it to go down there and realize that it's a very real possibility that even though we have all this institutional adoption, it can still reach these levels in the coming months.
There's the optimism I've come to love about you, JJ. 251 Legacy asked, do you think in this cycle BTC can uncouple from the general market such as S&P and Nasdaq? What do you think the likelihood is that if you had to put a percentage on it?
I think that would only happen if we saw a larger washout. And then I could see, like, if everything kind of crashed together, correlations go to one. As we were discussing on Tuesday, the people that are buying IBIT and these ETFs, I think there's a lot of overlap with people who own Nasdaq stocks, S&P, et cetera. So they're heavily concentrated into equities. And I don't think there's a scenario where equities sell off strongly. If we want to pull up that chart, they're not looking too good right now, just to give some perspective. So you see they're also breaking down much in the same way as Bitcoin. These charts look very similar. Here's the S&P 500 and here's the Nasdaq. They're both kind of just hanging out well below previous support. It looks like a breakdown. So I think if these things sell off, I don't think Bitcoin could be immune from that, just due to the overlap between holders. So as they start losing value on, say, Nvidia or whatever stocks they own, all of a sudden they're kind of find themselves in a cash crunch. Possibly if they're margined, right? Like if people are using margin counts to buy things, then they have to protect their margin. I think Bitcoin would sell off, but I could see a scenario where the stock market sells off, Bitcoin sells off, and then there's some kind of rescue package, ultimately devaluing the dollar. And I could see Bitcoin outperforming to the upside on the recovery. So I think it could happen in that scenario, but I don't see a scenario where stocks crash and Bitcoin goes up from here.
Yeah, and that correlation changes over time. It's not always a negative or positive correlation. It's constantly going back and forth, right?
Yeah, like if you look at it on a day-to-day basis, sometimes it overlaps, sometimes they move in different directions, but over time, they're basically the same direction. If we want to overlay the S&P on top of Bitcoin, like you see, they basically bottomed around the same time in October, went up, now they're going down together. Look at this on the 5-year. See, COVID, they crashed together, went up together. It's not a one-to-one correlation, but directionally, they're headed in the same direction over time.
So the likelihood is low. May see some divergence for a period of time, but it most likely won't really be breaking apart or losing that correlation. Okay.
Yeah.
Hello
People
world
panic,
from
what's
that?
when people panic, they need to raise dollars. So that
Yeah,
means selling any asset you can to raise dollars, and that's kind of the dollars are still the flight to safety, and I don't think that's going to be changing this
anytime
cycle.
soon.
Yeah.
Yep. Nope. Makes sense. Hello world from Delaware. Welcome. Glad to see you here. All right, let's shift a little bit to talk a little bit about outside forces. We're not going to have the same amount of detail, I don't think, today because we're missing Ben going into rates, his most favorite topic. But when I looked this morning, the Dixie was about 106. Oil was sitting about 82.54. That Dixie, man, that continues to give me chills at night. I'm having a tough time sleeping. What are you thinking here? Any more signs of whether this is going to break up or break down?
Well, finally found some kind of exhaustion yesterday, so it got above that 106.50 level, kind of the higher end of these Bollinger Bands on both the weekly and the daily. It's trying to confirm this breakout, in which case we might be headed for a lot more pain. But let's pray that this is the top of it. I think yesterday there was some news about the Bank of Japan and Asian banks kind of falling into stress in their FX markets due to the strength of the dollar, and they were coordinating with the Fed and Treasury to figure out a way that they can fix this with while also keeping up the rhetoric of, hey, we're fighting inflation. So I think if any of those actions are coming and we kind of see a weakening or add addition of liquidity, right? I think we would see that in the Dixie chart, and yesterday's top would be confirmed. You would see it break down below 105.20 or so and really start to flush back down towards 50-day moving averages or so. And I think that could provide that fuel we need for Bitcoin to make a move back to the all-time highs. I think we'd have some time to react to that as well. So if we pull up Bitcoin, overlay it on top of the Dixie, you see that there's typically a nice lag period between Dixie tops and Bitcoin bottoms. So if we look at, say, October, right, Dixie was running hot, then it ultimately topped out. You still had some time here to realize, hey, Dixie's kind of entering a new downtrend. You could buy some Bitcoin and be prepared for the washout, and then it runs up. So if Dixie is topping, we'll see it fall below 105 in the coming weeks, in which case you probably still have a chance to buy Bitcoin below 70K and get ready for that all-time high run. But nothing's been confirmed yet. It just looks like some mean reversion after the wild 2 weeks it had. Still waiting on the rates market to pricing cuts again and weaken it one way or the other. So just wait and see.
Yeah, I was going to say we're that seems less and less so. I think the commentary I'm reading is that the rate cuts are looking less and less likely now. It's more of a potential rate hike. Obviously, we still have tensions in the Middle East, so we still got oil, and then now, yes, the Dixie's pulled back some, but it's still looking raging hot. I mean, these three horsemen of the apocalypse are looking pretty strong right now.
You always have to be prepared for the shift, right? So what we saw over the like quarter four of 2023, quarter one of 2024 was the market really pricing in this like perfect scenario where we had lower rate cuts, inflation's going lower, all that. And we see the market's reaction to it. And now we kind of find ourselves in this scenario where we have not a total World War III being priced in, but people are very on edge about it. We have higher rates being priced in. So if things shift, like you have to realize that a lot of price is being suppressed right now because of this. So it wouldn't take much to alleviate that pressure, in which case I think markets would skyrocket again, the way we basically saw quarter four to quarter one of this year. So if we look at last time Dixie was running this hot was October, Bitcoin was down below 30K. The S&P 500 was about 1,000 points lower. Then as soon as they shifted, they started to signal rate cuts were coming, things alleviated. I think back in October, that's when these tensions between Iran and Israel first began. So the market was very on edge then, as it is now. And we saw that snapback, right? Like Bitcoin basically doubled and then some over the course of a few months once that pressure alleviated. So be prepared. The markets are always shifting, and this could snap back just as quickly as it snapped down, in which case we're headed much higher. But until it does, be prepared for the worst. At the same time, you have to entertain both of those sides of thinking in your mind to avoid being caught off guard. But
it almost sounds like it's easiest just to hold some spot. So I think what Ben is always talking about, always have some exposure to the market that's longer term, so you don't feel FOMO, you don't feel the need to do a knee-jerk reaction on the trade side. It can give you a little bit of peace of mind, so you're not over trading or trying to chase a trend too early or too late.
Yeah, if your exposure is keeping you up at night, that's too much exposure. Like you should have a plan. Like we said, that 200-day moving average is always a possibility, right? Strong possibility. So you should be like, okay, if price goes down there, that's actually good for me. I want to be able to buy it there, and I'm not going to panic. I'm not going to be one of the forced sellers if it falls that low. Additionally, if price goes up, I'm happy because I have exposure. So you want to be hedged in both directions. You always want to have a plan for any outcome because markets are, I mean, I spend 20 hours a day looking at this stuff. I have no idea what the hell's going to happen next.
Impossible to predict.
Yep.
Well, I do want to talk a little bit about positioning. Before we do that, I want to bring up a couple of these tweets we're seeing on X with some analysts and investors giving their perspective on where the market was going. So first I had here Chris Burniske. He tweeted on 4/15, significant fear in the market while prices find footing in reasonable ranges and excess gets flushed is a setup for eventually going higher. So obviously he offers a wide range. And again, I want to put his perspective more in the investor class. Meanwhile, you have Crypto Donald, who's definitely more of a trader, another OG that's been here for many cycles. He's quite bearish, and he's paying targets below the 60K washout. So if you look at those two scenarios, JJ, looking at some of what we're seeing here, what's being painted, by Donald, which do you think is more likely? What would you critique, if anything?
So I think Chris's scenario is the one that we outlaid before. We're basically in a repeat of this December 2020 or January 2021 fractal, where it's just a natural washout. You had a lot of people chasing with leverage, and now price is free to expand to the upside in the coming months. So I think that's kind of the scenario that Chris is favoring here. Obviously, he's a longer term investor, so he's just probably buying up spot. And if it goes lower, he's happy to buy it even more, right? So he's not I don't think he's out there gambling with 10x leverage or higher. So keep that in mind that he's not saying go all in at these levels. He's just saying this is a level that he finds attractive as a long-term investor. And I agree with that sentiment. I think if you zoom out over the course of years, price is going to be much higher. If we look at Don's, that's more of the bear chop scenario we were talking about. So he has like 52K as one of these regions where he would look to buy, and that's basically a retest of the February leg up. So if we look at the chart here on the daily, so this leg up here, and this is pretty interesting. So what happened is we had the ETF, and then obviously rebounded after the initial sell the news, found a base here at 50, but then this entire leg up was driven by gamma. And this is something that we covered at the time, is that the options market was short a whole lot of volatility, as we showed on the implied volatility chart that went screaming higher as price went to 60K and eventually 74K. But the whole way up here, like this was a lot of short liquidations. Obviously, you had dealers that were short call contracts that were having to hedge. So this was a lot of force buying. I think we also had ETF inflows at the time too. So there was like this kind of triple whammy of you had options market makers that were being forced to buy, you had shorts being liquidated, and then you had a whole lot of spot pressure. I think that could potentially be the scenario we see if Bitcoin reclaims this trend above 67K. So be aware that like that setup is here again if price starts to trend in this direction up towards the highs. But if it doesn't, like the same thing that drove us up could be what drives us down. Yesterday, I put out a tweet showing this gamma chart, which is the positioning of options market dealers, and they're currently short a lot of 60K strikes. And these are put options. So that means if price breaks below 67 or 60K for any meaningful amount of time, they're going to have to sell spot and perpetuals to hedge these sold contracts. And that could kind of turn into a black hole price action the same way the gamma drove us up in February. It could drive us back down pretty rapidly, and we could see a 200-day retest. Like we could see a crash back down there that would be outside the range of possibilities. As you see longs liquidated, like the people would be panic spot selling, longs would be liquidated, options markets hedging, and this would drive down pretty rapidly. And that would probably bring us to Don's range, which is like 48 to 52K. Retested this breakout, and I could see price forming a new base around there for a couple months, and then ultimately accelerating from there. So I think Don's analysis is as valid as Chris's. It's just two different time frames, right?
Okay.
And some different dynamics that could influence that one way or the other.
Good breakdown on the gamma. That was forcing us higher. Definitely need to see those ETF flows start to change. Of course, at this point, GBTC, I think, is going to drop below IBIT in terms of their Bitcoin holdings. I think I saw that headline when I looked at the data. It looks very possible given that they just continue to bleed out.
Yeah, nobody wants that. It's a toxic product.
That's
Toxic
right. So
ownership.
at some point, there's just not a whole lot left for the juice to squeeze on GBTC. So
Yeah.
let's have to see. All right. I want to get into positioning now as we talk about where to go from here. You've painted the pictures. Be honest, as I'm hearing you talk, I really feel like bear chop is more likely and V-shape is not looking great. Obviously, we're going to have to keep an eye out if we're going to have that liquidity Armageddon, but that's an outside force beyond the markets. But let's get a little bit into to some positioning. And if you are interested in doing some of the positioning that JJ is going to be walking through from an options perspective, I suggest you go to link in the description, open that coin call account where you can go and trade options, perps, and spot on all the majors. It's definitely a great exchange with a beautiful, elegant interface, competitive pricing, and here's the real bonus. You get to follow along what JJ's doing in all of his options videos, as well as what he does on this show. He's got more options videos coming. I've seen the preview and they look strong. You definitely don't want to miss that. So definitely check out that link in the description. Start this journey. If you had already started a couple months ago, you may have been hedged and actually made money as we see this pullback. All right, so JJ, let's walk through. What are you seeing now? Obviously, the best time to be invested was, a week ago, a month ago, 6 months ago. But as you look at it now, is this a good time to continue to sit on your hands the way you were talking on Tuesday? Or are you starting to see positions that look attractive?
There's not really any indication that we've hit a firm bottom yet, so I don't see anything that's screaming that you need to rush into positions now. But if we want to take a look at those two most popular contracts that have been trading for the end of May, so that's the 57K put that's currently trading around $3,098, and the $69,000 call, which is currently trading around $3,497 or so.
Mm-hmm.
So if you wanted to follow that positioning, obviously people are taking these bets with large amounts of premium. If you want to favor the bearish scenario, you could buy these puts. If you think we're going to recapture all-time highs in May, these calls would be attractive, and you could see these, 10x pretty quickly if we get that move to 100K in the coming months. I think that's an outside scenario, but these are the two most popular ones. If you're currently holding spot, you might want to take a look at selling some of these contracts, so you could go out to 70K beyond, and you could acquire some of this yield. You could sell 72K calls. Your break-even price would be new all-time highs at 74.6 or so. And if you're holding the spot, you obviously would be about $10,000 in profit by the time that trade breaks even. So if you're favoring this like bearish chop scenario, you want to acquire some yield by selling volatility. That opportunity is there if you want to take directional bets. Those are the two most popular ones right now. So the 69K call for May and the 57K put. I don't really have a firm bias as of yet. I'll need to see some some spot volume here. It just kind of seems like we're in this chop scenario. Probably go back and forth, liquidate shorts and longs until I really
So
see a fall in the Dixie. I'm not in a rush to take a positional bias here, one way or the other.
yeah, we talk about fat pitches. It feels like right now it's mid innings. It's not necessarily the good time to be trying to line up and enter a new trade. Do you
Yeah.
agree?
Yeah, very much so. And my
Okay.
kind of thinking on options is I'm looking for those really obvious times to become a volatility buyer. And I don't see that right now. And I think you will burn through a whole lot of money in premium if you're buying options in a chop scenario. So to avoid that, price just doesn't move anywhere for a couple of weeks. You lose 20, 30, 40% on your options because they're decaying instruments.
Yeah.
So you really have to wait for those signals to align. But at the same time, keep an eye on it and be prepared to act when you do see those signals. So we start to gain momentum above 65,000 or so. Spot volume comes in. At that point, I might be more interested in buying some call options. If we get that washout scenario, I'm not really in a rush not trying to short it and try to catch a big crash. I'd rather just wait for the crash to settle out and then look at the bottom to buy some call options longer dated. So that's kind of my thinking.
Well, I can see you're serious because you're stuck on Joker and definitely giving us the alpha, the inside alpha issue.
I don't know why it does that.
I do. When you're really serious and you really want to give things and you want people to pay attention, you automatically just switch into that mode. I got a question here. So a couple of points here. Adrian Flores said end of May is also when an ETH ETF deadline is due. Correlated with that expiry. So I guess if you look at the ETH options chain, I know we always go into Bitcoin. Are there potential trades there as we're looking at this at the news event that could be a catalyst either way? I mean, I think right now the indication is that it will most likely not be approved in May. The bigger one that we're looking for is the one in August, which is the BlackRock ETF. Although I think even the commentators are very bearish on that. But is there anything the market's doing for ETH options that may be a potential good time for a trade?
What's been interesting about ETH options is their volatility has been outperforming Bitcoin's over the past couple of weeks here. So we currently see that the ETH IV has a score of 79, as for Bitcoin's just around 72. And this has been driven by a lot of put buying on ETH. So the market's currently very bearish on ETH, the options market. I think that, we basically know this is telegraphed. The ETF's not coming in May. Market knows this, we know this, but the way that markets work for whatever reason, even though it's well telegraphed, most likely the algos are going to catch on to that and you'll have a kind of capitulation selling event whenever that news hits. So it's hard to really be too bullish on ETH options into that event. There's always the outside scenario that it just pumps on that, but it's not something worth betting on. But what you could do if you're bullish ETH into the end of the year, but you think May's going to be bearish, you could possibly sell some calls on it now for say June, right? Like if you look at the June expiry, you could sell say 350 calls or $3,500 calls for 250, and then you go out to December, and you could possibly buy some longer dated options. So you could buy these $3,500 calls for December for $700. If you sell the June ones against it for $250 or so, that lowers your cost basis to like $500 per call, which I think is pretty good. And then obviously, if we just continue to chop throughout quarter two, or if price even falls lower, you could just add to this position if you're long-term bullish ETH, which I am. And I think these calls are starting to enter attractive ranges. And ultimately, when that final washout comes on ETH, I think that'll be the best buying opportunity for calls. So I don't mind buying some end of the year calls on ETH and then selling shorter dated stuff against it with a plan to buy more calls once the inevitable wave passes, right? And the market puts this behind us. We know the ETF's not coming in May. Maybe it'll come in the future. I still think there's reasons to be fundamentally bullish on ETH, and I think those will manifest in the second half of this year.
So there you have it. That's how you can be positioned if you're a long-term bull on the Ethereum. I do want to say, I was looking before, and we didn't really cover this in the market update, but I saw Ethereum was still sitting on the 0.048 against BTC. I feel like the breakdown hasn't yet happened. We haven't seen the volume yet, and we haven't seen a break lower. Do you agree?
Yeah, it's just a slow bleed, right? It looks pretty ugly. And there still isn't that volume. It's just kind of chopping. I think ultimately the way this resolves is with Bitcoin around 80 to 100K, and ETH probably in a similar range as it is now, so somewhere around 0.035, 0.03. I could see it in that range. Like ETH kind of gets a sell on that news that the ETF doesn't come. Maybe Bitcoin's at a higher price, and ETH's kind of in the same sub 3,500, sub 4K range, and that's probably where we would finally see that rotation take place. But still waiting. This chart doesn't look like it's reached the bottom yet. It's fallen below the pre merge trade line, which is around 0.49, and we see it consolidating below that. So that's not too good of a technical indicator. Looks like we're going to have to go a little bit lower to see the convincing volumes come in there.
Yeah. All right, guys. Well, there you have it. There you have the market. It's looking like bear chop is the most likely scenario. We've got a couple of trades you can be looking at for Bitcoin, although it sounds like sitting on your hands right now, perhaps both Ethereum and Bitcoin is the best play. Let's see how this resolves in the next week or so. But with that, we're going to wrap up today's show. JJ, I want to thank you for dropping the alpha, giving a very detailed explanation for the market and where it's going to be headed. I want to say hello to everybody out there and say thank you for joining us. Be sure to be here every Tuesday and Thursday. We've got some exciting news coming out over the next couple of weeks. So if you haven't already, hit the like and subscribe button and the notification bell so you're always prepared when we go live. I'll leave you with my PSA, which is have some dry powder. There's opportunities coming. This is Marconi White signing off.